Welcome to our first lesson in this beginner-friendly trading series. Now, if you've ever wondered how traders make money in financial markets or what terms like trading and investing actually means, then you're in the right place. Think of this video as your starting point, and by the end of it, you'll have a better understanding of what trading is and why people do it. So what exactly is trading? At its core, trading is simply the act of buying and selling something in the hopes of making a profit. It's really that simple. That could be anything from stocks or bonds or currencies, commodities, or even cryptocurrencies. Traders aim to make money by speculating on future price moves. So in a simplified way, they are always trying to buy when prices are low and expect it to go higher, and sell when prices are high and expect it to go lower. Now, of course, in the real world, that is usually easier said than done, but you get the idea. Now, there is another very important distinction between trading and investing. You see, even though both trading and investing involves the buying and selling of securities, the difference lies in the time horizon and the strategy. Investors tend to buy and hold assets for months or years, focusing on long-term growth. That means investors aren't usually too concerned with trying to time the market, and they're usually less concerned with short-term price fluctuations. Their main goal is long-term stable growth. Now, traders, on the other hand, they focus on short-term price movements. They're not really worried about the long-term, but instead wants to profit from those short-term directional moves. That also means it's quite normal for traders to hold trades from anything as little as a few seconds to a few weeks, depending on their strategy. So where investors seek stability, traders, on the other hand, they crave and seek that short-term volatility because they make their money from short-term price fluctuations. Now, arguably one of the most attractive differences between investing and trading is that traders are able to make money in both rising and falling markets. Where investors are usually bound by buying and holding assets in the long term, traders don't have that limitation. Consider a simple example of trading something like gold or the XAU-USD symbol. Unlike investors who will buy and hold actual company stocks or physically own an asset like gold, a trader makes money from both the upside and downside flows of the price itself without having to own the underlying asset. So where investors need to worry about the carry and holding cost of those investments, traders don't have to worry about any of that. The reason for this is because traders don't actually own the asset that they are trading. They are simply speculating on the price and where they think it goes next. Now, let's look at a very simplified example. This is a chart of gold prices. And imagine for a second that a trader might be anticipating that gold prices are going to start climbing in the near future. So as a trader, they can place a buy trade, also known as going long, in an attempt to profit from the price moving up. Then, once the prices moved higher as they had anticipated, they can simply take profit on their buy trade. Now, in a second example, the same trader might now be looking at gold prices and based on their strategy, might anticipate that gold prices might be moving lower from here in the near future. So instead of placing a buy trade, this time around they can place a sell trade, also known as going short. Again, they don't have to own gold to be able to trade it on the short side. They are simply speculating on the price. And then, just like the previous example, once the prices moved lower, as they had anticipated, they can take profit on their sell trade. So, in a nutshell, where traders need to buy and hold securities, a trader does not have to, as they are simply trying to make money on where they think the price will go next, without needing to actually own the asset that they are trading. That is probably one of the biggest differences as well as benefits of trading over investing.